So let's talk about something that's at the heart of every business, whether you're running a startup from your garage or managing a multi-million dollar corporation. I'm talking about profit and loss, P&L for short. Now, I know what you might be thinking of numbers. Boring, but hang on. Understanding P and L is not just about crunching numbers. It's about understanding the lifeblood of your business. It's about making informed decisions that can lead to growth, sustainability, and yes, profitability. First off, let's break down what P&L really means. At its core, a P&L statement is a snapshot of how much money your business made and spent over a specific period, usually a month or a year. It encompasses your revenue, expenses, and ultimately your profit or loss. Think of it as a report card for your business's financial health. Investors and stakeholders look at P&L statements to gauge whether they can trust your company with their money. A single negative P&L might raise some eyebrows, but if you see consecutive negative reports, well, that's a red flag that there might be some serious issues at play. Now, let's talk about the break-even point. This is a crucial concept for any business. The break-even point is where your sales revenue equals your expenses. In simpler terms, it's the point where you're not losing money, but you're not making a profit either. It's the foundation of your financial strategy. Knowing your break-even point helps you set realistic sales goals and pricing strategies. It's like knowing the minimum score you need to pass an exam. Once you know that, you can aim higher. To calculate your break-even point, you need to understand a few key terms. First up, fixed costs. These are expenses that don't change regardless of how much you sell. Think rent, salaries, and insurance. You'll need to know these numbers inside and out. Then there's the cost per product, or CPP. This tells you how much it costs to produce one unit of your product. You get this by dividing your total production costs by the number of units made. Once you have that, you can determine your product sale price, which is essentially what you're charging customers. But wait, there's more. You also need to understand the contribution margin, which tells you how much money you're making after covering variable costs. It's calculated by subtracting total variable costs from total revenue, and then dividing that number by total revenue. This metric helps you understand how profitable each product is and guides your pricing decisions. So, how do you calculate your break-even point? There are a couple of formulas you can use. The first is break-even point in terms of the number of products equals fixed costs divided by. The second is break-even point in sales equals fixed cost, contribution margin ratio. These formulas can seem daunting at first, but once you get the hang of them, they'll become second nature. Now, let's pivot to the P&L statement itself. This document is your best friend when it comes to understanding your business's financial performance. It summarizes your revenue, cost, and expenses over a specific time frame. It typically includes sections like revenue, cost of goods sold, gross profit, operating expenses, operating profit, interest and taxes, and finally, net profit. Why is this important? Well, assessing profitability is one of the primary uses of a P&L statement. By looking at the net profit at the bottom, you can quickly gauge whether your business is thriving or struggling. You can also identify cost drivers, those pesky categories that are sucking your budget dry. This insight helps you prioritize where to cut costs. Moreover, analyzing your revenue streams is essential. A P&L statement can reveal which products or services are your cash cows and which ones might need to be phased out. It's all about making informed decisions that drive your business forward. And let's not forget about planning and budgeting. By using your P&L statement, you can forecast your finances for the next period, helping you set realistic goals. So, how do you effectively manage your company's P&L? It starts with setting financial goals. What do you want to achieve in terms of revenue, costs, and profits? These goals should be realistic and measurable. Next, you need to analyze your financial data regularly. Look for patterns and trends. This is where you'll find opportunities to cut costs or increase revenue. Identifying cost drivers is another key step. Break down your expenses to see where your money is going. Once you know what's driving costs, you can implement cost-saving measures. This might involve negotiating better deals with suppliers, automating processes, or even outsourcing non-core functions. And let's not forget about increasing revenues. This might mean entering new markets, launching new products, or even raising prices strategically. Keep an eye on your progress toward your financial goals. Use key performance indicators to track how well you're doing. Communication is vital too. You need to keep stakeholders informed about your financial performance. Transparency builds trust, and trust is essential for long-term success. Now, let's talk about P&L responsibility. As a senior executive, you're often the one in charge of the P&L. You must keep a close eye on how much money is left after expenses are paid. This includes generating revenue, controlling costs, managing budgets, and identifying risks. Your role is crucial because your decisions can significantly impact the company's financial health. In managing P&L, it's essential to continuously review and improve your processes. The business landscape is always changing, and what worked yesterday might not work tomorrow. Stay adaptable and be willing to pivot when necessary. So, in conclusion, understanding and managing P and L is not just about numbers, it's about strategy, foresight, and making informed decisions. As a senior executive, your role is pivotal in steering your company toward financial health and success. By setting clear financial goals, analyzing data, identifying cost drivers, and communicating effectively with stakeholders, you can ensure your business not only survives but thrives in the long run. Remember, a well-managed P and L is a roadmap to financial success. So embrace it, understand it, and use it as a tool to propel your business forward. Your future and the future of your business depends on it.